Okay, good afternoon, people. How are we doing? The other day we talked about cash as an asset class and why it's important to make sure that when you're structuring your finances, you always have some cash reserve. Now, the reason for that is because cash is very important. And even though most of the time it is advised that you are not sitting all in cash because of inflation and the temptation to expend your what would I call it now, your cash reserve. But also it's important to note that while you want to get rid of your cash, you have to keep a reserve, no matter how small it is. Now, this reserve should naturally cover things like your basic needs for a period of time. Now, I think one such idea is the emergency savings that we talked about some videos ago. It's important to always have a buffer for your personal needs because most of the time when you have when an issue comes up, you need money to sort out. Most of the time you're tempted to go to your savings or even any money that is easily accessible. And that's why your emergency savings is supposed to be to a large extent not easily accessible so that when anything happens, maybe you lose your income or anything, you can easily go and fetch that for the meantime. Now, the next asset class I wanted to talk about is a fairly known asset class, which is stock and its derivatives. Now, most of the time, um, when people think about the stock markets, they think like traders or gamblers. And that is a big problem because every time you approach the stock market with a short-term thinking, you're going to shortchange yourself. So, for example, for those who remember, those who bought Bitcoin at $3 and sold it at two and a half or $4 and were very excited. Yes, they did make profits. Some even made 100% of their inputs, but after a period of time, they will feel very shortchanged by the time they're looking at Bitcoin above $20,000. Now, this is usually what happens with the stock market. The stock market is your job while investing in the stock market is to do your own research. First and foremost, what companies are you aligned with? What values are you looking to see in a particular company? So, for example, I am a big fan of companies like Tesla, Apple, and Facebook. Now, those three companies for the past 10 years have made life easier for the human race in different ways. Now, this tells me that as long as they continue to go in that direction, there's a high chance that they are going to continue to succeed. And it's not surprising that company like Apple and Facebook and Tesla are one of the most capitalized companies in the world. Now, that tells you that they're creating a lot of value. Now, one of the things that you want to pay attention to when looking into the stock market is to first of all define your horizon. Yes, am I going into this for 5 years? Am I going into this for 10 years? Am I going into this for 20 years? Now, if you don't have a defined horizon, you're not going to have the staying power to let the investment do its time. Yes. So you're just going to be in a hurry to either close the deal early or, you know, like we all know what we do when we are in trading or gambling mode. Once we see small profit or once we think that, oh, this thing has gone up quite a lot, you know, which is why it's important to define what's your horizon. If I'm buying Apple, how long am I staying with this company? How long am I wanting to be part of the vision of this company? Because if you're not part of the vision, if you don't understand what the company does and you just throw your money in there, every time there's a news, that doesn't sound good, you're going to most likely want to get out because you don't understand what the company is doing. So you even don't understand the details of what is going on. The problem is not often the market. Like I told you, the market is cyclical, which means it's going to go in seasons. There's the bull market, there's the bear market, and there's a season where nothing much is happening. Now, all of these seasons will happen over and over and over again for several years. Yes, so you can say, oh, I'm buying into Apple now because I feel like, you know, and most of the time, because we are very disconnected from the realities of the companies we're investing in, we don't know when to sit on our hands. So, for example, when the market is euphoric and prices are rising daily, like, bread soaked in water, that is not usually the best time to engage because if you're doing that, you're going to get stuck in an overpriced asset. For example, some months ago, Tesla was priced as high as $1,300 a share. Now, that is ludicrous. I think some weeks ago, it was down to around, I think, 100 and something. Now, whoever bought at 1,002 will be annoyed when they're watching this video because they're thinking, but I invested too. Now, the truth of the matter is, if you give it a few more years, there's a high chance that your 1-2 purchase will be profitable. But for somebody who is hearing this now, you can look at what Tesla is now, 200 and something, and think, oh, I believe in their vision. I believe in what they're doing. I want to be part of it. And you put money in and you define your time horizon. Now, this is very important. If your time horizon is not defined, you're going to have trouble with knowing when to add to your positions, knowing when to pull out a little bit, knowing when to sit on your hands and wait. Because most of the time, with the stock market, the biggest investment is time, it's not the money. If you put money in today, whether it goes up or down doesn't matter because the market is always going up and down anyway. What's important is the time that you're investing. How long are you going to wait for the seeds that you have planted to germinate into a tree or a farm or a forest? So the time horizon will determine whether you're going to go from point A to point B. Yes. Now, the problem many people do is first and foremost, they don't do their research. So they don't go through the company's financial books to see what is going on with the company. For example, there are companies for when there was this big craze about Jumia when they listed on the stock exchange and everybody was shouting, oh, Jumia this, Jumia that. I wasn't very impressed because for a long time, Jumia was not a profitable company. So why should I be excited about a company that is not making profits? How are they going to be able to expand their operations? How are they going to be able to have the opportunity to stay long? So, for example, take Apple. Apple has one of the largest cash reserve of any company on the planet. Now, if you understand what that means, it means that they can put money literally into anything. They can decide they want to put 50 billion into research, for something. And that's why when you look at the quality of the products that come out of there, you will know that they're doing a lot of research and development. The processors in the Apple phones are crazy good. Yes. So you can imagine how very amazing this company is with all the work that they're doing every single day, and this is very important. It's very important for you to understand what you need to have to be able to get the best out of the stock asset class, as it were. I'm going to try to expand more on this in the next video. But yes, so all that thought, yes. So the stock market requires a little bit more work because you need to study, you need to read about the companies, you need to look at their values, you need to see what are they building. Do I want to be part of that? For how long also? And then, of course, their financial statements will tell a lot about what is going on behind the scene and in the company. Yes, of course, some companies doctor their books, so you can't really tell whether they're doing creative accounting or not. But if you're able to set yourself on the mission to find out what is going on, you'll be able to see things ahead of time, and that will help you to set up a profitable stock portfolio. We'll continue this conversation in the next video. Have a wonderful one.